Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Thank you so much for your time tuning in to the podcast Become Sensible, where we talk about practical business finance and tax for business owner. So today we talk about cash flow statement. This is a very crucial aspect of your business finance management. And I know people say, can you just not talk about cash? But I can say to you that especially small business, when you are at the stage of grow your business actually need a lot of cash to fund for that grow. And according to the score, 82% of the business fail due to poor cash flow management. So I cannot talk enough about cash flow. Not enough people talk about cash flow management. And people always say, you just need to sell more or you just need to make more money. But selling more require you to have a resource for the delivery. If you sell the product, you need to make the product to deliver. If you sell a service, you need to have people to actually also perform the work that you do. Grow actually require a lot of cash and funding. And at the same time, if you grow, you hire people before you actually need it. Or you buy the inventory of material before you actually sell, your cash will sitting there and will drain your business all the time. And so did I ever actually see the company that make $1 million in revenue but struggle with cash all the time? Yes, I did. 100%. So many clients actually start with us because they run out of cash so fast. And they need us to figure it out, help them to actually understand what is happening with their cash. While revenue, they try to grow, their product is wonderful, their service is great, and they make money. But why the money just hit the bank and come out of the bank at the same time, as fast as the money coming in to the bank? And they would say, what I need to do to handle this situation. And so today, that is what we talk about. What is cash flow management and how you can do that in your business? So I think it's always start with the basic. So cash flow is the last financial report that normally we prepare for a company, and it's basically one of three financial reports. We talk about profits a lot, we talk about balance sheet, and now is cash flow. And it's actually used the information from both profit and loss and the balances. It's organized all the transaction after that affect cash to mean the net cash flow for the company during the year at a certain period. So cash flow statement consists of three main parts. This is cash from operating, which is your main business purpose. Like for example, if I come out and I want to sell a glass, that is my main business operation, is sell a glass. And if my cash is cut, anything that I sell at the end of the day that generate from selling a glass, that is cash flow from operation. The second thing is cash flow from investing. So if my business make great money, I take that money from selling the glass. I take it and I invest in long-term assets like equipment, building, or I buy stock and bond to get the dividend and interest. That is called cash flow from investing. Number three is cash flow from financing, which is now I need to grow and scale my business. So I need to borrow the fund that to pay for the human resource, to pay for technologies, to pay for anything that I need to grow and serve the client that our customer that I want to serve. And that is called cash flow from financing, because we will need to borrow that from the bank from the investor, or we need to issue the stock. And that's just why company that go IPO is basically one of the ways that they can raise the fund for their business to prepare for the growth of the business, because they actually need cash for that. There's two methods for you to like prepare a cash flow statement. One is indirect method. That is GAAP, General Accounting Standard. GAAP regulation require to do with like indirect method, which is you take the net profits from profit and loss, and you started with it on the cash flow statement, and then you change because of any activity from operating activity. For example, like a change in account receivable, a change in inventory, change in working capital. Those will help you to go down into the net ending cash balance. So that is indirect method. The other method is called direct method, which is strange, but it's easy to understand. It's because the direct method is not accepted by GAAP, but it actually, I think, is very easy for small business owners to understand, which is where you start with like cash balance you have in the bank. 20,000, 10,000, 30,000 beginning of the month. And then you will see like cash inflow, which means like you sell revenue potential will come in this week, this month. Any account receivable that you plan to like collect, or you expect to collect that money, any like money potentially coming in. And then that's create you cash inflow. After that, any activity that will drain your cash on you need cash to pay for, like payroll, your vendor payment, anything that will take the cash away is called cash outflow. So you get the beginning balance plus any inflow minus any outflow. That will be net ending cash for you. You see that key element of cash flow statement is has operating cash flow represent the livelihood of the company. It's generally like more favorable for potential investor because your business actually create cash to like sustain its operation. And any change in your working capital need to be like used wisely and need to be like observed. If you have a lot of account receivable that you're supposed to collect and you forget to collect, or like forget collecting and forget to send the invoice out, you actually like lose the money, because on the profit and loss, everything counts as the sale. At the end of the day, you have a net profit, but you actually don't collect the money. Then that money actually never show up into your cash balance at all. And then like if any investment that you have, like investment into like land, property, equipment is very important for the company, because it depends a lot in terms of the state of your business. Like for example, you start the business with an idea, it's called existing. You bring an idea, you test it, it's past MBV. So it passes, it makes some money and it's create a profit, a small amount of profits. And then that's past the survival state. Now you go into the state of success. But at the success stage, you have two choices. Many business have a many choice, but based on Harvard business, it has two main choice. Whether you will like remain the same way until the owner retire, or like they want to sell the company, or the other one is you want to actually grow. The growth stage of any business actually require a lot of cash. Like you hire the people, you need the technology, you need to have a better material, you need to have a fund for R&D, for development, for the research. All of this is drain the cash out of your business. And if you don't take a look at all of these cash flows position every single week, or at least one per month, maybe in the next 6 weeks or next 2 months, you actually will run out of the cash. And I see it. Some of the business actually make the profits, but they actually can fail because they run out of the money. And you will say, like, Fiona, there's no way the company to make profits, then will be fail and run out of the money. There is, because, for example, if your company is a coffee company, so you sell the coffee, you pay all the expense that relate to the coffee, and you have a net profit. But then, like, your wholesaler customer client want to order, like, for example, like 1,000 pack of coffee. Regularly, you actually produce around like 200 to 300 pack of coffees per week, for example. But now they order 1,000. When your customer or your client order that, you actually not could be like collect the money yet until you deliver, or they make some deposit. For example, they make the deposits like for 100 bags, but you need to deliver 1,000 of them. So the money that you get in short term is just 100 a bag of coffee. But now you need to pay for your suppliers, pay for your employees, pay for the plant manufacturing, pay for your office to actually to take care of that 1,000 orders into the future and deliver it. And because of that, your money actually coming out faster than money actually hit to your bank account. If you don't manage that very well, you can be like run out of the money and basically like shut down the production because you don't have the money to pay for your employee to perform the work that you got the order from. So in my experience, like the lack of attention to cash flow management actually make a company stuck in a certain cycle. And I have a company that come in both, and you would say like most of product-based business, like the business actually create the products like coffees, glass, or whatever, like physical product, will be stuck in the cash flow position. No, it's actually there's a lot of service they also have this problem too, because they hire staff too fast. Their revenue generate and the cash flow generate from their activity, their business is not fast enough. Like this, the money that they need to like pay for their employee, pay for all the like operating expense, like fixed expense. And then because of that, once they hit into the cycle of cash flow, it means that the money coming in is lower than the money coming out. It's very hard for them to actually break out that cash cycle, especially if you have a big team like 10, 20, 30, 40 people, because your goal as the business owner, you have a goal, okay, we need to generate like this $100,000 or $200,000 in a week, for example. Make it an even number so easy to like talk about example. But whether all your team will perform in the same speed that you expect so that the cash will generate faster. The one of the main way for you to break the cash cycle is you actually create cash faster than the cash coming out that in the cycle that you are in. For example, every single week, every single month, your cash, basic cash unique is $50,000 to operate your business. For example, bare minimum, that break even. And you don't have enough cash in the bank yet to like put a reserve. And then now you say, okay, I need to make more money. The money need to like create more so that I can like break this cycle. But if you have a team, your goal, your intention, your strategy, not everyone in your team will carry the same way. If your business is just only you or two more people, most of the time, these people will carry the mission or the goal that you want because they know and you can count on them right away. And that is like a very small team put an effort is normally create the result faster. And this is one of the reasons why you will be surprised. The bigger corporation, the bigger company, the execution is actually slower because it's need approval, they need to analysis, they need to get the result on board. Like there's so much step and state that people need to involve to get like one of strategy or one of the decision to become executed. But if you have a smaller team, it's so much easier for you to actually form the strategy, the goal that you have for financial. That you say, we need to make right away $50,000 in the next 2 weeks. What is the strategy to do that? How to execute that? Who will take care of that? Most of the time, business owner will work a lot extra hours to actually, and their team go on board with it. They normally operate it and then like get it out and achieve a result. But the bigger your team is, the harder for any execution. And it takes forever to go through all the process. And that is why it depends a lot in the state of your business. So you need to know what is the state that you are in and what type of the people that you have on the team that anytime the company need an urgent cash or revenue goal, because of course in perfect world we will like have every money, we have everything like the cash in the bank to operate. But I know as so many business owner that face is the cash draining out, and you need to break that cash flow cycle. And to break that cash flow cycle, there's just a lot of like strategy and depends a lot of your specific situation. But as always, if you want to generate more revenue, you have a strategy, you have a product or offers that you think that you can give like promotion and discount to get cash right away, or like anything that you think that is can be go to the market is proven concept and people will like buy it right away if it's a good deal. Of course, from that to actually generate it, you as the business owner take care a lot of carry on forward until you create the result. That's a small team. But if you have a big team, you need to be like very careful that you have the people that you can count on. Anytime the company need cash flow, cash right away, you have those can make that execution done for you and done with you, like on the team fast. So that is in terms of like how to break a cash flow cycle. But of course, there's so many like specific things like you maybe like reduce your inventory, you can like co-sign your inventory, you can send the reminder to the people that who have a outstanding account receivable with you, or you can like negotiate with your vendor to delay your payment. Of course, there's so many different things. But you can make that decision when you actually have the cash flow statement in front of you, because it's helped you to know, okay, in the next 2 weeks, in the next 2 months, I will face this challenge. How many ways? This is how many ways that we can bring cash coming in fast. And then who will be the people that, main people that will help you to execute it? Depends a lot in terms of the state, the human resource, how big is your team, how much in terms of like your business idea and the relationship that you have with your vendors and your customer. I did like years ago, like I think decades ago, I have a clients that basically have outstanding account receivable, like hundred of $1,000. And no one actually spend the time to come and like have them to collect the money, and they drain the money. They run out of the money. And I say the first thing is we need the people that actually call all these people and ask them to make the payment right away. And that's just what one other thing that we have to get in is 6 feature of cards coming hit into the bank right away. Of course, it's not enough for their situation at that time, but at least they have a 6 feature of the money in the bank, and they start to use that money strategically in the way that like help them to carry the operation moving forward. But you can only do it if you have the cash flow statement on hand. So make sure if you are as the business owner, you need to make sure that Your accountant, your bookkeeper, your financial person need to actually prepare this. If they don't, you do it yourself. If you have a small team, you do it yourself. Like for example, like me, I have my cash flow statement like every single day. I know that this is always helpful that we know what is looking forward. One other thing in Harvard Business Review years ago, they explained it. When you grow your business, cash flow will become the most critical part to actually grow your business. Because if you don't have enough cash, you basically like just slow down your growth state because now you cannot hire the people in, you cannot like invest in the research, you cannot have a like technology ready for your growth. So that is why one of the things that I always put in terms of like non-negotiable financial tasks for me is actually cash flow. I do it for my clients and I do it for my own business too. So I hope that help you. And then one of the things that you always need to ask is, do we have enough cash to break even? Can we generate enough cash flow to stay in the business? Remember, you have a beautiful ideas, you have a wonderful talent and skill, but without the money, without strong financial position, you cannot sustain your business in long term at all. So that we can earn the return on your assets, on your equity, on your labor in long term, and also like stay in the business so you can serve your purpose, your mission. So ask the right questions and also like have a checklist like non-negotiable financial activity every single week so that you always like stay in the business, which is I hope that you're all doing that. And I hope that this episode is helpful for you in terms of cash flow. Let me know if you have any question, and thank you so much for your time today.